Hey, dollar scholars! Have you ever traveled to another country and had to swap your money for theirs? It's a bit like trading your candy for someone else's cookies. You're never really sure if you're getting a good deal. But what if that problem vanished? Imagine if everyone on Earth used the exact same money. No swaps, no confusion, no hassle. In this video, we will dive into the idea of a single global currency, and we'll find out what that might look like in our everyday lives. If there is just one currency, say we call it WorldCoin, then nobody needs to exchange money at airports or banks. When planning a vacation, instead of worrying about going from dollars to euros or euros to yen, just bring your WorldCoins. Right now in Europe, a bunch of countries share a currency called the euro. It means you can hop from France to Germany to Spain without changing money. That's super handy. If the entire planet did the same, that convenience would go global. But a single world currency is like wearing a one-size-fits-all t-shirt. It doesn't always fit everyone perfectly. Different countries have different economies, like different body shapes. Some are big spenders, some are super savers. Some grow really fast, others take it slow. When each country has its own money, they can choose how much to make or how high to set interest rates. It's like a bakery deciding how many muffins to bake and what price to sell them based on supply and demand. If we have just one bakery for the entire world, well, that might get complicated. But who actually controls a country's money? And how do they decide how much to make or what interest rates should be? That's where monetary policy comes in. Monetary policy sounds fancy, but it's basically who controls the money, how much is made, and what interest rates you pay at the bank. Usually each country has its own boss of money, called a central bank. In the US, that's the Federal Reserve. In Europe, it's the European Central Bank. In a single currency world, there would be just one giant global bank making decisions for everyone. If it raises interest rates, borrowing money becomes more expensive all over the planet. If it prints more money, that could affect prices from New York to Nairobi. Some places might need more money to help their people get jobs. Others might need less money to keep prices from going too high. But in world coin land, they'd all get the same treatment. Like everyone having to wear that same t-shirt again. Here's a funny word for you, seigniorage. It's basically the profit a government makes when it prints its own money. In a world with one currency, only the global bank would have that superpower. Individual governments couldn't earn that profit anymore. They would have to rely on other ways to raise money, like higher taxes or more borrowing, which is not good in the long run. Economists have something called the optimum currency area theory. In short, it says that sharing a currency works best if workers can move around easily, so labor finds jobs wherever needed. The economies are relatively similar. No one region is super poor or super rich. Everyone agrees to share a financial safety net, like a giant piggy bank, for bad times. For the entire planet, that's obviously an enormous challenge. With a single currency, governments would lose their money printing profits, but business and trade would greatly benefit. Imagine running a business where you sell sneakers online. Right now, if you want to sell internationally, you've got a mess of different currencies to deal with. Prices change depending on the exchange rate. Profits shrink when the value of one currency drops, and you might lose money just converting payments. But with a single global currency, no more guessing, no more surprise fees, just smooth, predictable transactions. When European countries ditched their individual currencies and switched to the euro in 1999, it had a huge impact. Trade between these countries jumped by around 15 to 20% in the following years because businesses no longer had to worry about exchange rate risks. Companies could set prices in one currency, making it easier to sell across borders, while investors had more confidence in stable profits. German car manufacturers like Volkswagen and French luxury brands like Louis Vuitton could now price their products consistently across multiple countries without worrying about fluctuating currencies. This predictability helped them expand sales across Europe without taking unexpected financial hits. But before the euro, things were a lot trickier. The German Deutsche Mark was often stronger than the French franc, meaning that when the Deutsche Mark increased in value, German cars became more expensive for French buyers. One month, a Volkswagen might cost 50,000 francs, but if exchange rates shifted, that same car could cost 55,000 francs the next month, without Volkswagen changing the price. This made it harder for companies to plan their profits and set stable prices. On the flip side, if the franc weakened, French brands like Louis Vuitton would suddenly find their products cheaper in Germany, which might boost sales temporarily, but also create instability. Businesses had to constantly adjust their pricing, and customers in different countries would wait to buy depending on currency swings, kind of like shoppers waiting for a sale, except the discount came from currency changes. By switching to the euro, all of that uncertainty disappeared. A Volkswagen in France and Germany would cost the same in euros, making life easier for businesses and consumers alike. This stability encouraged companies to expand across Europe, knowing they wouldn't be caught off guard by sudden exchange rate shifts. Money has always evolved to meet the needs of society. With digital currencies like Bitcoin or central bank digital currencies, some people say a global currency might be closer than we think. But those are still very new, and everyone has different opinions on how they should be used or regulated. It might be that in the future, technology will make switching or sharing money easier. Who knows? Maybe we'll all have fancy digital wallets that work the same way everywhere. But for now, that's still a big what if. Let us know in the comments if you would trade your country's currency if a global one existed. Thanks for watching, and don't forget to subscribe for more curious questions about our world.